Hey guys, welcome into another weekly portfolio update. So starting off here with the thumbnail photo that I always put up. So in the middle we've got the return on my stocks this week, so down $989 this week, which leaves me with a loss of $7,120 or 12.3% on my entire stock portfolio. And there's a nice little graph to show you how far down I am. My crypto is down $368 this week to a portfolio value of 4,157, although it's actually down a little bit from there, as you'll see soon. I just took this photo like a couple hours ago, so it's gone down since then. My house has gone up 10k in value this week, and my net worth has gone up 9k. So yeah, good week on the net worth, but simply because my house has gone up in value, and it only goes up in like 10k increments. So yeah, that's pretty much everything that I've got in that thumbnail just there. So on to the stocks that I hold. So if we sort by total change, we are still getting absolutely devastated. We have nothing in the green, nothing even close really. Honest is a position that I only just started recently building, so it's the closest to being neutral. But yeah, everything else is getting absolutely devastated. Corsair is the only one that's kind of starting to come back. MicroStrategy I was positive on for the longest time, but eventually it flipped negative. And yeah, a lot of other stocks that are in very good buy prices in my opinion. So a few things to go through this week. Firstly, I'm going to talk about, just going to mention the insane scenario with Ukraine and Russia, and how that affected or didn't affect the stock market. So in pre-market, upon hearing the news that the invasion had gone ahead, everyone was skeptical, didn't really think it would happen, and when it did go ahead, the stock markets initially sold off in pre-market, but then decided to just go absolute beast mode and go up like 3% in a day, which was really weird. I wasn't expecting it at all. So the stock market that day opened incredibly low, and then so it was the lowest for the week. So yeah, Thursday they opened crazy low, and then everything moved upwards huge that day. So there was good buying opportunities then, but unfortunately, because I don't want to wake up at 3:30 a.m. or 4:30 a.m. or whenever the market opens, I didn't get that dip, and by the time I woke up, I watched my portfolio go from negative to positive at like 7 a.m. so the market being open 4 or so hours, and then throughout the day got to up 2,500 that day. So that was pretty insane. Wasn't really expecting that, but that happened. That said, the week still ended absolutely neutral for the S&P 500. Nasdaq was still down 0.3%, and the Russell was the only one that eked out a profit at 0.6%. But you saw in my screenshot before, I did not eke out a profit this week. I was down this week. Yeah, but I did deposit 1k into my stock on my Sharesies account, and with that I bought Honest, $200 of Honest at $5.47. Do we have Honest open here? So open up Honest. So $5.47. As you can see, I missed the low of $5.05. But yeah, $5.47. I think I bought earlier in the week at one of these lows earlier in the week. So yeah, got a couple $100 more of Honest, I bought $140 of Palantir at $10.41, which I do have Palantir open. So $10.41, you know, somewhere in here. Not the huge low of $9.78, which was insane. I wish I had been awake for that, because I would have bought that dip very happily. Next up was $100 of Tattooed Chef, and I got that at $11.67, so yeah, pretty much the same as what it closed at. Nothing crazy, although it went all the way down to $11, which is pretty close to the 52-week low. It may have even been, we know these graphs aren't the most accurate on anything but the 1 day, so on the 1 day they give you like really specific numbers. As you start zooming out, like I think from the 1 month, yeah, you're getting like one value for every 3 days, so it probably wasn't there, the 52-week low of $10.89 on Thursday morning, market open. So yeah, missed that dip unfortunately, but yeah, who knows, could go lower, could get opportunity to buy more, might not. I also bought $100 of Beyond Meat. So Beyond Meat had a pretty bad week, down 20%. They had earnings this week, and yeah, I bought some at $44.40. So not quite the week low of $41.74, but not too far off it either. So I have $500 left in my, or $500 into my Sharesies account, and that will be to continue buying next week, unless the stock market goes up, in which case I'll just leave it there. Yeah, so these three companies here reported earnings this week. So Spce, they've been absolutely destroyed recently, so even though their earnings was a miss, I believe they didn't do very well. I'm not specifically good with financials, but the report that I saw didn't look very good. Massive losses, but and worse than expected as well. Yeah, they still weren't devastated because yeah, the market has just been pricing everything so cheaply that it's kind of already priced in for some of these stocks to do, like, well, not get affected so much from the earnings. So yeah, it's Tuesday after the close, so Wednesday morning they actually moved up. They opened up on Wednesday and then continued to move up a bit, although still hit the week low after that, interestingly. Yeah, I suppose just with the whole market moving up from Thursday morning, everything just moved up heaps. So apparently, 22% up on Spce due to the Ukraine getting wrecked by Russia, which is kind of weird that would make the stock market go up, especially like this random space company. It does seem quite weird that something completely irrelevant to this specific company would have such a profound effect on it, but yeah, who knows, right? Fear causes fear, and everyone just sells at times like those for some reason. After the close on Thursday, we had Coinbase and Beyond Meat. So yeah, Coinbase and Beyond Meat both down this week. Beyond Meat down significantly, down 20%. Coinbase. So after the close on, what day did I say? After the close on Thursday, so market open on Friday. So yeah, they basically opened in line with what they closed on Thursday. So they had like almost no reaction to their earnings. I like Coinbase. I like their financials, and I will be holding the company. I probably won't be buying it anymore just because of all the other stocks that I have to purchase at the moment. Like, there's a lot of stocks in good buy price ranges for me. So yeah, Coinbase just won't be on my list at the moment, but definitely not going to sell them at this price either. So yeah, holding it for the next 1 to however many years. Yeah, Beyond Meat, so they have been absolutely destroyed. I've been holding this one for a while, so yeah, I've held through some a lot of volatility, and I think this might be the stock that I've held the longest of my currently owned positions. If we stop sorting by, so this is like, this is unsorted now, like the list here, so this is basically acquisition date for me, so Beyond Meat is the stock that I've been holding the longest, and then Stitch Fix, Arc, SPCE, Untitled Chapter, and so on, and my newest position being Honest, although I do keep these, I move these ones to the top usually. Yeah, reorder them just to move the currencies to the top so I can see the currencies up first. Yeah, so I've held Beyond Meat for quite a while, over a year I'd say, and yeah, it's not doing well for me. As we can see, down 63%, so yeah, getting absolutely destroyed. I did put, you know, that extra $100 in there to decrease my cost basis because I still believe that plant-based meats are the future, and they also, yeah, are still moving in the right direction, although a lot slower. Well, I feel at least that they're still moving in the right direction, just a lot slower than they were previously. But yeah, I'll still be holding Beyond Meat. Yeah, this is the Yardeni forward PE ratio graph, so really interesting metric that I like to look at. So yeah, we're still trading fairly high range for large caps. Anything between like 17 and kind of 12 range seems to be normal, you know, just draw a line across and see what seems to be normal. And we are trading, you know, quite far above that. But I mean, we also have to consider like various factors on that, like some of the companies that have been moving into the largest of the large caps recently have been, or like recently, I say recently, but I mean over like the past 10 years, 15 years or so, the companies that have been moving there have been extremely high growth. Like, you wouldn't really expect like Amazon, one of the biggest companies in the world, or the biggest company in the world, in the US stock market, to have such high rates of growth and stuff. So the high rate of growth on some of these extremely large companies like Amazon, Apple, and Facebook, and so on, they have caused their valuations, they demand higher valuations, so these large cap stocks have gained higher valuations. Previously, I know in the past it's been like big tobacco and oil companies that don't have like hugely high growth rates, so it's like gotta kinda think that maybe this might stay this way for a long time. Like when it was up here, that was ridiculous, but now that we've moved down a bit, like it could stay within these valuations. But then, I mean, watching the market just go down like week after week, day after day, who knows? We're in a downtrending market, so could fall heaps more. But I mean, there are some good deals within the large caps now, so yeah, who really knows? I don't try to predict anything short term, I just like to buy the dip. Mid caps, fairly in line, on the low end of in line at the moment. So yeah, so plenty of good deals to be found in mid caps, and yeah, small caps just crazy undervalued. And yeah, lots of good buying opportunities among small caps. On to earnings this week. So we have, of the stocks that I own, we've got Smile Direct Club and Workhorse. I have no idea what to expect for Workhorse. I don't even follow them anymore. I just hold that position because why would I sell it at like an 89% loss? It has been over 90, I'm pretty sure, before. Over a 90% loss, so yeah, I'm just going to leave that there forever to remind me how dumb I was for just trying to buy stocks. There was a short period of time where I bought stocks specifically to be exposed to certain sectors, So when I sold out a Tesla, I was like, damn, I need a electric car company. I need to own one. And there was like a catalyst coming up for a workhorse that week. So I bought a workhorse stock just to be exposed to electric car companies. And that was a huge mistake. I did it with a few others as well, like Qualcomm, and to be exposed to like a 5G play, and did it for a couple of others as well. Can't quite remember, but yeah, I did buy a few stocks just to be exposed to certain sectors, and heavily regretted it afterwards. So yeah, don't do that. Don't do what I did. But Small Direct Club, interesting thing down here. The average move for Small Direct Club on earnings is 11.9%. It's an extremely volatile stock. It does go up like sometimes 20% in a day, up or down, usually on earnings, because it's, yeah, that's when it has catalyst, but sometimes even not on earnings, it'll go up like 15% or down 15% in a day. It just moves like a very extremely, and the average move on earnings is 11.9%, and options implied move is 24.4%. What that means is that there's a lot of options plays being done around this stock, so the premium that's being paid for options is quite high, which implies people think it's going to move big. Whether they think it's going to move up or down, who knows. But considering how volatile a lot of the big companies have been recently, like, we could see anything from some of these smaller stocks. Like, when there's big stocks like PayPal and Meta moving 20%, 25% on earnings, you could see literally anything from a small company like Smart Direct Club. And Snapchat, like, we went up 60% in a day. Like, you could see ridiculous amounts from Smart Direct Club. But that could be up or down, who knows. And also, there's been other small cap stocks that just haven't even moved on good or bad earnings. So it's like, I don't even really know what's going on with these earnings at the moment. There's no clear direction. Everything's going both ways. So yeah, I'll pretty much just wait out. If Smart Direct Club moves down, I'll buy more. If it moves up, I'll just hold it. Workhorse, I probably won't be buying more. A couple of reasons. One, I hold it in my Hatch account, and it's annoying to put money into my Hatch account because I don't like to double up positions in my Shares account, and if I put money into my Hatch account and then I want to buy the dip on something else, and I was like, but I don't want to buy in that account, so it's just easier to use one, really. So the main one I use is Shares, because I do smaller transactions. I think I ran the numbers one time, and it's anything above like $800 or so per transaction, you're better off doing through Hatch, or it might have been 600 or so, around that kind of figure. But yeah, I obviously do like 100 is probably $100 is probably my average buy. So, or my most common buy anyway, maybe not average, but yeah, so I tend to stick to Sharesies and accept the 0.5% transaction fee along with the foreign exchange fee, which is either between 0.4 and 0.6, I believe. Can't remember exactly. Yeah, so anyway, moving on from this one. So just looking at my largest positions, because obviously my account was down this week, so has to be a reason for it. So here it is, pretty much 3% down on Tattooed Chef, and that's by far my largest position, or sorry, second largest position to Tattooed Chef. To Corsair. So, and Corsair's actually up this week, but half the amount that Tattooed Chef is down. And then we got Palantir, which is my third largest position, which is down almost 4%. So yeah, that's why I'm down this week. Palantir is now a $6,000 position, and then yeah, we've got some pretty big numbers up here. Like that's a large position for me. But I mean, it's Corsair Gaming, so I feel they're pretty undervalued anyway. So I don't feel the risk is super high there. I feel like the risk is higher with Tattooed Chef because it's the valuation's higher because it's a higher growth company, and then the risk in Palantir is ridiculous amounts higher again, and then you get to Smart Area Club again, even higher risk. So yeah, quite risky large positions actually that I hold. But anyway, that's pretty much all I have to say about stocks this week. Did I mention? Yeah, so yeah, that's last week's earnings, and then yeah, I've got a few coming up this week. And that's what the market's doing this week. On to crypto. So yeah, $4,117 is my current balance, but it's changing by the second. So yeah, Ethereum 2,742. Looking back on the graph, it like hasn't really done a whole lot. Like it's been volatile, but it hasn't actually gone anywhere in the past month or so. Like it's pretty much just staying here. Like it went down as low as 2,400, but it's yeah, just kind of hanging around this range at the moment. So who knows if we're going to see the next leg down or a leg up? Who knows? Crypto isn't really following the exact same cycle that it used to. Like it used to have a 3-year cycle where it would do a massive crash, but everything, obviously, once people know like a pattern to expect, people anticipate said pattern, which breaks the pattern with markets that are dictated by people's decisions. So yeah, it's like by knowing the future, you change the future. Essentially, it's like a whole concept. So never going to see those patterns kind of repeating. So who knows? Like people might be more comfortable now with the whole sense that crypto will recover because it always has done. So yeah, I don't know. We could see a much smaller dip this time. We could see a lot more dip buying. There could be a lot more institutional buying, backing the dips, and like actually maintaining price points. So yeah, I don't know if we'll see like a big like a huge like 2017 type crypto crash again, but I mean we are like close to, I think we've from the top to like the recent dip in Ethereum, we did go down 50%, so we're up at the max like 4,800. Although it doesn't show on that graph. We did get to a 4,800, and then we went down as low as 2,400. We're a bit over, so around about a 50% drop down into this, which means we're not quite 50% down at the moment on Ethereum. So there's still a pretty big drop. Like I know, like it went down a lot more in the 2017 crash. I think it was like 80 or 90% on all crypto. But yeah, we've seen a pretty huge crash. We could have bottomed on crypto. We might still have further to go. Who knows? But I guess we'll find out in time. Obviously, I'm still going to be crypto mining. This is my mining rigs here. So 840 megahash, and it uses about 2.15 kilowatt hours. I mean, sorry, 2.15 kilowatts. I mean, 2,150 kilowatts. I'm saying it wrong every time. 2,150 watts is how much power it's drawing. So yeah, I'm making money on it anyway. So whether crypto goes down or up, I'll still be making money pretty much. It would take a pretty weird scenario for me to not be making money. I did up a whole chart and everything, and it's pretty much either crypto has to, or Ethereum either has to go down to 600, or the network hash rate has to increase like 3-4 fold or something, or the network would have to like have a halving or something, or any number of combinations of those factors. and it's not super realistic considering I have relatively efficient mining equipment and I don't have the worst power in the world. The way that it would work is if crypto did go down and it started to become unprofitable for some people, there's already people who with higher electricity costs than me who would be out of the game first, and then there's people with older cards and equipment that are less efficient, like RX 580s and such, who would be out of the game before me as well, even if they had slightly better electricity costs. But then there's obviously people with like 5 cent electricity costs who would be, because I'm at 26 or 25 and a half, 26 cents electricity costs per kilowatt hour. There's people with like a quarter of that. So I wouldn't be the first out of the game, but I wouldn't be the last either. So, you know, I'm fairly mid-range. Also, I feel that the people or the like companies and larger miners that have to like rent out space for their miners, or they've purchased buildings and they have mortgages on the buildings or business loans and such, they have much higher overheads than I would. So they're going to be cash flow negative on their mining equipment a whole lot faster than I am. Yeah, that's my theory about it anyway. And the whole concept of mining means that if people stop mining, you get paid more as a miner. So it's like it's a free market essentially. People will stop mining if they're not getting paid as much as they were. So, and when that happens, everyone who is still mining will get paid more, which will be me, because I'm not going to stop mining unless for some reason I'm no longer able to afford the electricity costs. But I mean, I should be able to. It's like $400 a week, month or so it's not huge. Also, I'm close to 1 full ETH. I keep saying that, but you know, another week or so and I'll be at 1 whole Ethereum in my unpaid balance. I got like 0.58 or so in my other wallet, and then 0.33 here. So yeah, I think about 1 more week and I'll have 1 whole Ethereum sitting in, half in here and half in my wallet, unless I've transferred it over by then. But yeah, it would be pretty cool to have 1 whole Ethereum, 1 coin. Yeah, that's pretty much all for crypto. I don't know if I mentioned earlier in the week, my portfolio was down at 3,200 at the lows. There was a big crypto dip due to the Ukraine-Russia situation, and yeah, took a tumble all the way down to 3,200, and my cost basis on this portfolio is 3,000. So yeah, that was pretty crazy, because I started buying crypto like right here right before this gigantic run, like in November 2020. And pretty much any cryptograph you look at is going to have this same, like, you know, flat for ages and then just absolute enormous run. And yeah, I started buying crypto around here. So I didn't put it all in one lump sum. I bought in over months and months and months. But yeah, if I had have, you know, been in the market for this whole huge upcycle and then gotten all the way back down to almost my break even, like, that's pretty crazy. But I need to point out the fact that I am leveraged in this account. So I've got 1.7k in margin on USDT. So yeah, that's the reason that it swings a bit more volatile than the regular crypto market. Yeah, that's pretty much all for crypto. One last thing on crypto mining. All the GPU prices are dropping at the moment, so I could be purchasing some more GPUs in the future at some point, because they're going to be cheaper. That's pretty much the only reason. I believe in crypto long term, and if I can essentially buy the option to purchase, it's kind of like, yeah, options, like buying a GPU is buying the capability to acquire a certain number of, or a certain value of a coin per day for the next like 3 to 10 years, depending on how long the GPU lasts. And considering you pay for a small amount for electricity, it's like buying the option to purchase the coins at like 1/5 their value or so, because you generally make like 4 or 2 to 5 times the value of the power cost you make back. So yeah, it's probably a really complicated way to explain that, but making money anyway, so yeah, enjoying that. It's actually kind of fun to build mining rigs, so yeah, enjoying that. That's pretty much all I got for this week's update. So yeah, have a great rest of your day. Leave a like, comment, and subscribe to support the channel, and see ya.